Hey Vince, I was told not to put all my eggs into one basket. So how do I diversify? What do I need to do to diversify? Do I need to diversify? Well, all those answers can be found in this video. So make sure that you stick around to the end. Let's go. Hey, what's up? I'm Coach Vince, former athlete turned money coach and the creator of the Money Mindset League, which is a community of former athletes like myself and other like-minded individuals who want to make smarter financial decisions, build five-figure savings, and invest to build wealth. We don't follow the majority, we follow the money, and we think like millionaires. If you want to be a part of that, make sure that you subscribe and give this video a like. Listen, do you need to diversify? The answer, quite frankly, is yes, if you don't know what you're doing. If you don't know what you're doing, then you really need to diversify. You don't have a clue what these companies offer. You don't have a clue what's going on in the stock market world, then yes, you need to diversify, all right? There's a lot of retail investors. There's a lot of new investors out here in the market that's just going and picking stocks without understanding what they're getting into. You may not know what you're doing. You may not know what you're getting into. So there's no reason to do that because you don't have a clue of what you're doing. And then on the other side of that equation, no, you don't need to diversify. Guess what? If you do know what you're doing, if you know what you're doing, then you don't have to diversify. You can niche down, you can pick stocks, you can do whatever you want to do if you understand how the stock market works, if you understand how those companies that you're picking works, if you understand the future and the growth of those companies and what's happening inside those companies. You don't want to pick companies that have horrible balance sheets. You don't want to pick companies that's not making any money. You don't want to pick companies that are big time in debt. That's not what you want. All right. But if you know what you're doing, if you know what you're getting into, if you know how all that stuff works and all the factors that go into picking stocks and picking individual stocks, then no, you don't need to diversify. Is it helpful to? Will it help you over the long run? Of course. But if you know what you're doing, nah, there's no reason to. If you know and rely on tech, you know tech is going to be around for a long time, then you can pick all tech stocks and you're totally fine. You can pick those Amazons, Apples, Googles, and Microsoft, and those type of tech companies and be safe. Even though you're only investing into one sector, one type of company. All right, there's no risk when you know what you are doing. So number two, how do you diversify? Let's say I'm one of them people that, you know what, I don't know what I'm doing. I don't know how to invest. What do I need to do? Well, you need to diversify. And one of the best ways to do that is to purchase and get involved with an ETF. So what is an ETF? It's an exchange traded fund. It's something that mimics an entire exchange, like the New York Stock Exchange, like the S&P 500, like the NASDAQ, okay? These exchange traded funds have multiple companies in them in multiple sectors, depending on which sector or which exchange that you're following. All right, so some examples of this. Let me get into some. So for example, VOO is something that tracks the S&P 500, which is the top 500 companies, all right, in the exchange, in that exchange. Okay, then we have SPY, which is Spider, which is also another S&P 500 ETF. We have QQQ. All right, so this one is kind of like the NASDAQ. It mirrors the NASDAQ, which is a bunch of tech companies. So you have a whole bunch of tech companies inside this ETF, which is going to give you diversification over the long run or over the short run or however long that you're investing. Then we have something called ARK, ARKK. This is ARK Innovation ETF. It's an ETF of all innovating stocks, innovating things that are coming to the market and that's going to change our world in the future. Then we got VTI, which is the total stock market, which is Vanguard's total stock market ETF, all right, which is something that you can invest in if you want total diversification, okay? Remember, these are not my recommendations. This is not me telling you that you need to invest in these companies. These are just examples of these companies. You do your own due diligence. You do what you feel best and what you feel will do best for yourself. You can also invest into multiple companies. You can do this by yourself. You don't have to go the ETF route, okay? Some ETFs are fairly expensive. We have SPY, which is upwards of $300. We got VOO, upwards of $300, $200, $300, okay? QQQ, ARC, okay? 100 and something dollars, okay? But what you can do is buy into single companies, but diversify in multiple sectors. So we have consumer cyclical, all right, which are all the, Home Depots and the seasonal things that fluctuate up and down based on the certain times of year, or, certain events happen in the economy. Those are the things that you can invest in. You can invest in tech. You can invest in banks. You can invest in financials. You can invest in a number of things, okay? JP Morgan, Apple, okay? Invest in those type of things to diversify yourself. It could be 10 stocks and you can be diversified, all right? As long as it's not one. You're putting all your money into one, that's not diversified. So if you're somebody that needs to be diversified, that feels better if you're diversified, then that's what you should do. So what do I do? What does Vince do? Well, I do a little bit of both to keep it all the way real with you. So, I diversify with ETFs, okay? That goes into my long-term account, my 40+ year long account, my account that's probably just going to be left for, my heirs, the people that come after me, because that's one of my goals, invest to build wealth that gets passed down to the people after me, to my kids, to my kids' kids. Okay, I want to leave trust. I want to leave money to them so that they don't have to struggle like me and my family did on the come up. All right, I'm doing and making all these sacrifices right now so that I can leave something behind for them in the future. All right, that's what I do. I invest in ETFs. I invest in something diversified over the long run that's going to give me really good gains. Now, I don't invest in something that's going to give me minimal gains. I try to invest in things that's going to give me really, really above average gains, 15-20% per year in there. All right. And then I also invest and pick stocks that are diversified. Okay. Or shall I say, pick stocks of the future. So, my long-term account is for the very far out future, next 30, 40 years, 50 years, maybe my retirement income. And then I have my aggressive growth account. So this is stuff where I invest in things like the future. I invest in things like 5G. We talked about this before. I invest in things like the Internet of Things. I invest in things like robotics and AI and biotech and things like that, and 3D printing and all that type of stuff. This is stuff of the future that I think is going to come around, not in the near future, but in the next 3, 5, or 10 years, especially with what has happened in our economy in 2020. We just had the pandemic. A lot of these things are being quickly innovated so that we can adapt and start integrating these things into our daily lives sooner because of what happened. The health crisis has forced us to start moving in directions, and that's where the money is going. There's a bunch of baby boomers, like I said in a previous video. The baby boomers are coming of age. They're putting their money into things like biotech and 5G and AI to better their health and also increase their money. That's where the money is flowing. Remember, we don't follow the majority. We follow the money, and that's where the money is going. So that's where I'm putting my money. All right, and that's what I'm doing. I'm diversifying long term, and I'm also investing aggressively in an aggressive growth fund, which I call my legacy fund. Into 30+ stocks and everything there. So if you want to see that, if you want to see what I'm investing in, you want to see what I'm selling, you want to see what I'm buying, you want to see my trades, you want to see my full entire, financial library, education library, you can get that. And you can also get weekly coaching by joining the league, joining the Money Mindset League, okay, for less than 50 cents per day. And then, or if you're not quite ready for that, you're just now getting started, you need to learn how to manage your money and get in position and set yourself up so that you can start investing over the long run, over the long term, without worrying about anything, without taking on too much risk. Then make sure that you hop in and get my financial training camp course. That's in the link in the description. Everything is in the link in the description or in the bio or wherever that you're watching this. So look, do you need to diversify? No, if you know what you're doing. And yes, if you don't. So look, that's it for me, man. That's all I got for you. Remember, believe in yourself, invest in yourself, and most importantly, love yourself. Peace.